Yeah.
Okay.
What is going on, guys? Welcome to another edition of Sunday Sermon. This is where we go over the week. We go over what data is happening, what Fed speakers or Fed news is happening for the week. We also go over what earnings are happening this week. And then we dive into actual market overview, which is SPY, QQQ, IWM, and then a bunch of individual tickers and setups that we are watching for the week. So it is a good place for you to get some news, get some trade plans, and get ready for the week. I'm your host, Mr. Banks, along with No Risk, No Premium. I hope everyone has had a good weekend ready for this week. What is going on?
What is up, guys? What's going on, brother? Looking good, looking like fucking baby face right now.
I know,
Looking real
right?
nice, dude. Yeah. What's up, guys? I am No Risk, No Premium. Today is Sunday, like Justin said. Sunday sermon is where you go to get your mind right, to get your brain right, to get your trade plans right, to get some charting done. But obviously, just prepare for the week. As always, we do it on Sunday because if you're trying to start your week on a Monday, you're a day behind everybody that is actually successful and doing everything the right way. So I always start off these calls, guys. I like to start them off by going through what's some big economic data, right? Because what moves the market? Obviously, buyers and sellers move the market, but what else moves the market is news, right? News. And anytime we have big news like big data prints or Fed speakers or Jerome Powell speaking or rate hike decisions, etc., whatever, right? Whatever. We can, that'll obviously create large movements, and those are the waves that we try to ride on. Get on and get off and get on with our day. So if we know those are coming, we got to be prepped for them, right? Got to be prepped for them. We don't want to go into the day not knowing that there's a big data print 30 minutes after the market open, while we're sitting in something short dated swing, and we totally get wrecked behind it just because we weren't ready, right, for that data to come. So as we always do, guys, I like to come over here to the U.S. economic calendar on Market Watch. I like to do this on Sunday. Use this because it's a very great overview of what to expect, and it usually has everything that you're going to need, just in the general sense of what's going to be coming on this week. But if you want more in depth, I like to go to the U.S. economic calendar on investing.com, and then you go through that on the daily, right? So you'd look for tomorrow here, and it has the entire world. So you see Europe data, Germany data, Great Britain data, Canada data, Europe data. You see all this stuff down here. So that's more in depth. Those are on the, every single night you want to look at those. But for the overview, I like to keep it here on the U.S. economic calendar on the Market Watch. We'll just go through the week here. Obviously, everybody has got their eyes right here. You guys see on my screen here, FOMC decision on interest rate policy, and Federal Chairman Powell, aka Daddy P, we call him sometimes, aka Mr. Fuck Your Puts, whatever you want to call him. He is speaking, right? So he'll come out 30 minutes after the rate hike decision at 2 p.m. But on Monday, guys, we have some data coming 15 minutes after the market opens. So is it a good idea to maybe wait 15 minutes after the market open on Monday if you don't like trading that first 15 minutes? Maybe, right? Maybe we do have, right, two prints here, 9:45 a.m. We can see there the manufacturing flash PMI and services PMI. Tuesday, the Case-Shiller home price index. Okay, that comes out 30 minutes before market open. Then we have the consumer confidence index coming out 30 minutes after the market open here. That will cause a little bit of movement. So if you're going to be trading anything short dated, 0 dates, a couple days out on the indexes, etc., and you're in something that would, there could be some liquidity grabs, fake outs, stop loss runs, whatever, of just an initial reaction, especially on the indices, to the consumer confidence index. And then on to Wednesday, obviously the interest rate decision, which is the FOMC decision. And then 30 minutes after, so that's at 2 p.m. That's at 2 p.m. Then 30 minutes after, we have Federal Chair Powell comes out and does his press conference along with his Q&A. So Wednesday is a day where if you are not a day trader, a scalper, somebody that likes fast market movement, I would heavily suggest to maybe grab a tea time that day, get away from your desk that day. What I also like to say is not do anything fucking stupid that day, meaning, if that's not your strong suit, trading that type of conditions, don't do it. Just don't do it. Okay, on to Thursday, though. Lots of data coming out Thursday. So we have Wednesday FOMC decision on the rate hike policy. Next morning, 8:30 a.m. Eastern Standard Time. That's 1 hour before the market opens. Jobless claims. So anytime the market moves, it moves off of interest rate decisions and the jobs market. They're looking at what are rates doing, what's inflation doing, how's the jobs market doing. So we have jobless claims 1 hour before market open. Also have GDP coming out. So how well is our economy doing? Are we going into a recession or not? Right. So we have a rate hike decision or not rate hike decision. And then we have a GDP print coming out. Then we have pending home sales coming 30 minutes after the market open. Okay. And then on to Friday. Friday's our normal, data that comes out, the University of Michigan data with the consumer sentiment. Last Friday, we didn't have anything. This Friday, we've got a ton. We have a lot of personal data. So personal income, personal spending. Then we have PCE, which is a price index, right? Which is a price index that comes out on Friday. That's at 1 hour before market open, and the consumer sentiment like normal comes out 30 minutes in. So very heavy set week compared to last week. So we want to be ready for that, right? We need to be ready for that. Okay, what should we be looking out? Because now we're going to have some earnings coming out, right? Going to be having some earnings coming out. What do we have coming out this week? I believe off the top of my head, if I'm not mistaken, what comes out this week? Yeah, we've got Microsoft on July 25th. What day is that? Day before the FOMC decision, right? That's Tuesday, right? So we've got Microsoft on Tuesday. I believe Apple, Amazon, those are all going to be the week after. Meta is on Wednesday, right? Yes, Google is also on Tuesday. So Microsoft, Google, why are those important to know? Microsoft, Google, Meta are coming out, have earnings this week. Why is it important to know that?
Ooh, type it in the chat.
Type it in
Let's
the
see.
chat,
Let's
guys.
see
I
if
want to
anybody
see,
knows.
see if you guys know. Why is it important to know, especially if you're in our Wolves of Wealth Discord community, right? What do they move? What are they in? They're in the NASDAQ and they're in SPY. Good. T1, Kiflin, Anthony, good. Ash, good. Guys are all
Top
getting in
10,
here
yep.
saying this stuff. Absolutely good. And they're the top 10 holdings in SPY. Absolutely. So it's good to know. Look, right, week after next, Amazon, Apple. Apple's the largest weighted stock on SPY. Okay, I believe on QQQ as well on the NASDAQ. So if we know that, right? If we know that Microsoft's the second most weighted. So if you trade SPY, it's probably good to know what Apple and Microsoft are doing, right? So we've got Microsoft and Google. Google's top 5 weighted on SPY, right? So those two, Meta's up there as well. So those are 3 huge stocks that all go this week in conjunction with a big rate hike decisions and a lot more economic data. So if you didn't think things were going to get crazy this week, well, I have to take a step back and reevaluate. Yeah, things could get a little bit hairy this week. So know that as well. Know that those, right? Those stocks could easily inflate premiums market wide, right? Market wide. So now that we know that, we've got Microsoft on Tuesday, Alphabet, Google on Tuesday, Meta is Wednesday, right? AMD is the week after. Let's see if we have any. AT&T comes out. Verizon's this week as well. Boeing is on the 26th this week as well. So a lot of big stocks, having a lot of earnings this week. That's good to know, right? That's good to know. I'll tell you guys this, probably not good to trade prior to their earnings announcement, especially on like an Alphabet or a Meta or a Microsoft, because there'll be a lot of IV, a lot more IV pumped into these stocks. So unless you're selling premium, meaning you're writing contracts and you could sell those contracts or write them because, you're selling premium at a huge inflation to what they should normally be trading at. So for us, more than likely, you want to have your levels charted, and then you can go and play the IV crush after they report. Then you go in, right? All that premium gets sucked out of it. There's an IV crush on it. Then you can go in and play strictly off your levels. But this week, FOMC, I think everything just went Wednesday. Okay. And then we've got Tuesday for Microsoft, Tuesday for Alphabet, Wednesday for Meta. So Tuesday, Wednesday, huge days. Okay, guys, onto the charts now. Guys. For me personally, I'm somebody that for the last probably 3, 4, 5 years have exclusively traded the S&P 500 futures, SPY, and SPX. So what I do on this portion of it is I go through ES, that's the S&P 500 futures. I go through SPY, the cash ETF. I go through QQQ is the NASDAQ, and then the IWM is the Russell 2000 small cap index. I run through all three. I give you 4 different tickers that you can trade and have 4 different game plans on. Then Justin comes in and brings it home with all of the other tickers that he trades regularly that are non-ETF tickers for the most part. So I'll get started here, guys. As we can see, really quick, let's zoom out here. Let's just zoom out. Now, forgive all the lines. There's a ton of lines on my chart here, but let's just, what would you guys say? What has been this trend? This trend has been buy the dip, buy the dip. This is an upward trend. The trend is your friend until it is no longer the trend, right? Until it breaks trend. Well, the trend has been up. The trend has been up. Just because you want the market to go down doesn't mean it's going to go down. Matter of fact, the market really doesn't give a shit about what you think. Okay. So rates are high, inflation's high, this is high, jobs market's high, whatever, blah, 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 blah. It doesn't matter. If the market wants to go up, it's going to go up. So this is why you just trade your levels. But as far as for the S&P 500, this has been, we have gone from, just from May all the way up here to, July. So what is that? 2 months. 2 months, we've gone basically 500 points. 500 points, right? From May to March. So this trend has been up. Do we likely get a pullback here at some point? Probably. Does it look like we're getting a little bit top heavy up here? Yes, but I still think buy the dip is the fashion. So what I'm going to be looking for, okay, for this coming week, the levels I like is I like this area in here at 45.50, 45.45 to 45.50. I like this area in here for a bounce. Okay, I like this area in here for a bounce. So I'll be watching this area initially. I'll be watching it overnight tonight and all throughout this week. Now, if we get underneath that area, initially I'll be liking a bounce in here. So something that comes in and makes a higher low that likely tests the level up here again. If we get underneath 45.45 though, 45.25, 45.09, and then 4,500 even. You can see the bounces, right? You can see this double bottom in here. You can see why I'm liking these levels. So mark it on, get it going. You want to see 45.50 hold this week. Underneath there, 45.25, 45.09, 4,500. Okay, really simple levels there on ES. Now, going to the upside here, we'd have to break Friday's high here. Break Friday's high to get above 45.90. We'd see 46.09, 46.21, 46.30 above there. On to SPY cash ETF of the S&Ps now, right? Chart's going to look very similar. Chart is going to look very similar. Okay, like this same structure that we had on the ES chart. I like this 450 area. I do like this 450 area for a bounce. I will be watching that initially tomorrow. Now, if we do get underneath 450, I'll watch 448.50. That's my second bounce area. That is my second bounce area. Guys, if you're on camera, go ahead and shut your cameras off for us, guys. Go ahead and shut your cameras off. A lot of you guys are on, but it's okay. Probably don't even know. Look, like this 450 area for the bounce or 448.50. I don't like this short unless we're underneath 448.50. Why? We can see what? There is a long way down under 448.50. Okay, and there is this gap in here. Everybody's been talking about this gap. Does it get filled? I'll just go to the daily chart here so we can see. Okay, there is a major gap down here. We can see it, right? We can see it. This was also the top of this little balance area that we had in here, right? So I wouldn't mind seeing if we can get a retest. I love a long out of this area. So my plan initially for this week in this area here is to see if we could get a bounce out of 450. That would show the strong bull side of the trade is still there. Okay, lots of buyers still here. Okay, if not, I look for a bounce at 448.50. If we do break below 448.50, I will look for the short because we have 3 to 4 points of downside movement that I think we would have a long swing opportunity. Now, I'd be looking for a swing opportunity long here, anywhere from 443 to 445. That is this gap fill area. Okay, so 450, 448.50 bounces. I like a longer swing, maybe 2 weeks out, maybe a month out. that you could buy. Maybe some 460 calls for September expire. I don't know. Down in this area, that's what I'll be looking for. Now, if we do bounce out of this area and bulls defend well, we need to break above this 455. We could see this double top area above 455 opens up 456.50, 458, 460, 462 above there. Okay. QQQ. A lot of the same game plan here, right? It's all going to be the same game plan. Every chart is telling us to buy the dip, right? So that's the trend. That's what we're going to do. I like this area in here of this 372. I like 372 for our bounce area, 374 to 372. Look for that bounce in there. If not, you can watch 368 below there. But I think bounces into that area, 370 to 372, you can look for a swing long. Have to break back above this 380. As you can see, there was a little bit of supply formed here on this 1 hour because we went and rejected intraday, came down and had a second rejection in there as well. So have to take out 380. We take out 380 to the upside, really levels easy to see, 384, 386, 389, 393 above there. Okay, IWM, redheaded stepchild of the market, I call it. It's a joke. But it's the Russell small caps. Been trading really nice. It's almost been trading a little bit better than all the other ETFs as far as like level to level is concerned. As we can see here, right? As we can see, we had this area that was a balance zone. I'll zoom out a little bit more so you guys can see. Okay. Okay, we went for a long time. Now, just bear with me. I want to give you just a little bit of overview here. Okay, we had this balance zone in here for 3 months. Whoa. For 3 months. We all can see this is balance, the market balancing. Buyers and sellers are pretty much equaling each other out. Okay, so once that happened, we finally broke out of that area, right? What happened? We broke out of that area, broke out of this balance, the top of the balance, broke out of it. We back tested it. We created a new balance zone in here, right? We weren't in there for 3 months, but we had some balance. Then we broke out again of this balance zone, right? So we haven't had a back test of it yet. Well, so now we can see if we zoom out, go to the 1 hour. That's what I want right there. Boom. We can see that we are just balancing again, but now we have this 193 area, which was like almost a triple top in here. So I'll be watching this 193 area, 193.50, 193.50. Want to see us hold that. If we can hold that, take out 196 to the upside, opens up 199 and then 203 above there. Now, only cause for concern where I can see a possible short trade set up here underneath 190, 193.50. You could target it down to this 191, 189 though. 189, that is definitely a bounce zone for me in there. Okay, guys. So look, watch this 193.50 zone. Okay, area. Watch that for the bounce. Okay, all the way down here to 191. Underneath 190, though, we could see this 189. I think a bounce in there. IWM's almost been more recently stronger than everybody else of all the other indexes or ETFs. So this has definitely been more of a buy the dip and respect the level. So I really like 193.50. I'm going to watch for 193.50 all week long, especially tomorrow to hold, take out recent high of 197. 198 will open up 199, 200 plus from there. And if the Russell is leading, it's tough for the rest of the market to go down, it feels like, right? If it means if they're buying small caps, so you're probably going to be buying the big companies as well. All right, guys, that's all I got for you. Justin, you could take it over from here, brother, and take it away.
Awesome, guys. Let me go ahead and share my screen with you. Give me 1 second. Just going to get everything prepared. Hope everyone liked that. It's always good to have an overview of what to do on the bigger picture. So let me go ahead and share my screen. All right. Everyone can see the Pfizer?
Yes.
Everyone's good? Cool.
Yes.
Awesome. So first thing I'm going to be looking at is Pfizer this week. Let's go take a look at the 4 hour here. 1 hour looks good too as well. But we had a strong breakout here on Friday. Let me go ahead and add the extended hours real quick to you guys. We could see that we had a strong breakout here. We were testing this massive resistance here around 37. We flagged out and had a beautiful breakout here on Friday, leading up. And now what is this leading up into? We could see right here is a gap. Let me go ahead and take off this extended hours. You can see the gap pretty well there. So we are extending into this nice little gap fill on Pfizer. Started June, so it took about a month for us to break out of here. But usually these gaps do get filled. So this week I'm looking for a break and hold of this 37.43, which would be the high here. 37.43 for a break and hold, looking for a gap fill up to 38.28 here. So 37.43 this week on Pfizer for a break and hold to fill this gap up to 38.28. Then we could look to take a reject once the gap is filled for maybe some back testing, whatever happens this week. But I am looking as a swing candidate for this week as well on Pfizer. Now, it would be beautiful if we got a back test between around 37.20 to 37 here. So we came back and back tested this and held this would be good, especially to get a good entry on a swing to complete this gap fill. But again, I'm watching this 37.43 for a break and hold up for this nice gap fill, but also watching for a back test if we do get it between 37.20 and this 37 level to take a nice swing up for this gap. And another thing, again, if we do fill this gap fill around 38.28, we could look for some weakness to take some downside there. So that's my first time I watched this week, guys. Next on the watch is going to be Meta. I know we have earnings this week, but potentially depending on how inflated the contracts are, I might be playing Meta into earnings. Why? Because there are some pretty big levels that it is playing into, and I think we could get some nice movement on them. Relatively weak, kind of pretty much double top here on Meta into some weakness going into earnings this week. I am first going to look for this 291 level to hold. So if we take a step back here for a moment, you can see this 291 is a big resistance support flip, right? So one thing to keep in mind is to always look at the bigger picture. What is that bigger picture doing, right? Don't get so zoomed in on the 5, 10, 15 minute. Always zoom out and look at the bigger picture. 1 hour I like because it's big enough to look at the bigger time frames, but small enough to where you get enough candles each day to build these nice levels. The 4 hour and the daily are also showing you that stronger supply and demand also levels, but this helps you get into that nitty gritty between that, getting the nitty gritty of the support and resistant levels flip. So we can see 291 was a big resistance level. And what do we come down to, right? Resistance turn into a massive support here. So this week I'm looking for another back test or a little bit selling off, looking for 291 down to 287 here to hold. 285 would be the ultimate back test here, but really looking for this 291 down to 287 to hold. If we can hold that, I would look for a nice retest of our massive 300 level. So we could look to take a bounce and possibly swing up to 300, where we can then look to take a reject this week. So again, 291 to 290 to hold. Could look to take a swing up to 300 for a reject. Also looking for 287 to hold down here. Don't really like the hold of 285, but when we get down there, we'll be looking for a bounce at 285. But I do think we more than likely could possibly get a retest of our massive 300 psych level. But again, this 300 is a resistance, support level, right? So big support resistance flip as well as a huge psych level. So a couple different scenarios on Meta. We either hold 290, 291 down to 287 for a bounce back to 300, or we look to take a nice reject around 300. Next on the list is going to be a DraftKings. DraftKings has a nice value base rally base right up here. We're talking about supply and demand. So we're basing here. We rallied up into the base, right? We could see base rally basing out, right? Typical supply and demand, base rally base. So now we're basing out, kind of flagging out, essentially bull flagging out here. Looking for a break and hold above 3170, 3170, get a nice break and hold to the upside. Let me go ahead and look at these bigger time frames for you. So let me zoom out a little bit. So if we get a break and hold of that 3170, have to zoom out all the way back to, right, 2021, pretty much 2021. So massive levels that we're retesting back here. Looking at 3250, 34 level here, about 3530, call it 35 to 3550. And then obviously our big psych level up here at 40. We can see 40 would be a massive support turn back into a resistance flip. Also, it is a nice whole round number here at 40, so pretty much a psych level as well. So this 40 would be our ultimate goal. But we need to clear 3170, pretty much the high of last week. 3250 would be my next level, pretty much 34, around 35 to 3550. And then this big 40 level would be my price targets to zoom up here on DraftKings. Now we could take a look here. We do have a gap. Let me turn off extended so you guys can see this gap. We do have a gap pretty much below 30. So 30 gap down into 29.20, pretty much 29.20, 29. We could take a short here into this nice gap fill. If we do, just know that we do have this 29 gap fill on lock right here. So I would definitely start to take profits into that if we do decide to get weak. Or we could look and stay patient. And if we do decide to enter this gap fill here on DraftKings, we could look for a bounce back up. But again, we do have this base rally base, 3170 break to the upside, leaves us to 3250, 34, around 35, 3550, and ultimately, like I said, our 40 level to the very top. So we're player to the upside, or we could look for a nice short trade into this gap fill, and then we could look to take a bounce after that. Now, if it does decide to get very, very weak, I would look for a back test between 28 and 27 here. We do have this imbalance here. So if we decide to get very, very weak, and then I will look for a back test around 27, where I would then look to take a bounce. So a couple levels, either or, but as always, guys, I'll keep you updated this week on what we are trading and when I'm entering. Netflix and chill, massive gap down. Earnings gave us some big relative weakness this week. So this one is also a nice big either or hamburger. We can eat on it either way. Break and hold below 423. I would look for a 416, 412, and down to 409 pretty much. So let me go, it should be about 409. So either or this week, we could see a 423 break and hold to the downside. Does look like a nice little bear flag here on the 1 hour. So if this does come to fruition, would look down to around 416. There is this tiny gap fill, right? So you guys can see where we bounced off of. What do you know? The beginning of this gap at 423. So if we do get some downside, I would look around 419, possibly down to 416 for this nice little gap fill. 412, 409 for these bounces. And then to the upside, we'd be looking at 437.50 here for a 430.50, sorry, for a break and hold. I would target 437.50 and then up to pretty much 449, between 449 up to 470, 475. There is this massive gap fill. So just know that we would probably, if we do decide to base here and head back up, I would look for a reject first at this beginning of this gap fill, and then look to go long after we get into this gap fill. So a couple ways to look at it this week, guys. We do have Netflix to the downside. Break and hold 423. We'll look at 419, 416, 412, 409. To the upside, I really want to see a break and hold of 430.50 before I get long. If we do break and hold 430.50, we'll be targeting 437.50. 449 for this beginning of this gap. And then we have this massive gap fill up to 470, 475 here on Netflix. Next one on the list is going to be a common swing, which is equity, which is just purely buying shares, guys. No options trade on this. If you want to take a leap on it, you can go right ahead, right? You can go right ahead. One thing to keep in mind, if you are swinging commons, one thing you can also do is take leaps on it, right? You could take um, extended trades, right? Extended swings on the options. Buy time. Buying time is going to be your friend. I know we play same week expirations for day trading down to 0 dates, but if we're swinging something, right, why not buy time and let it play out? You might not be able to hit 100%, 1000%, but you can sit in a trade, get that 20, 30, 50, 80% on a swing and just sit there and not have to do anything, right? I think that's pretty good too. So looking here on the weekly here on Tilray, I am looking for, let me go down to Zoom. I am looking, looks like we're trying to create a rounded base here, right? A nice little rounded base. We'll be looking to add a commons shares equity position around now, right? So round down around 160. We'll be looking down to add down to 150. Below 150, I don't know if I'll add any more, but I'll just hold on my position for my average down into it. We do have this nice gap fill around 193 up to 232. So if we're looking at the larger time frames, it does look like this one is pretty much set to at least make some sort of comeback or at least try for this gap fill. If we don't get into the gap fill, we could target around 186 to 194. So this would be a nice swing either ways for commons. So this is my big common swing for this week. And that is all I got.
All right, now I'm not muted. Am I muted now?
No,
Am I
you're
good?
good.
Okay. All right, guys. Hey, look, for those of you that tapped in that are in the Wolves Wealth community, guys, appreciate you always coming out. Obviously, this will be recorded and posted to our YouTube for our members. Anyone that came in on the YouTube live, guys, if you liked anything that we did today, if it added any value to you, if you got any benefits from it, hit the like, hit the subscribe, follow along. We post tons of educational focused content for the stock market. I give my trade plans every single day for the 4 tickers that I go over. And follow along, guys. It's free. Tell a friend if we provide some value. Really appreciate you guys. Other than that, guys, the only thing I'm going to say for this week is practice discipline. Okay. Lots of economic data coming out, lots of different earnings coming out of some big tickers. So take it slow. Take it slow. Just because the market opens at 9:30 a.m. on Monday morning, Eastern Standard Time, doesn't mean you need to be in something right at 9:30. Okay. Chill. Have your trade plan. Execute at your levels. Get in, get out. Okay. And then go enjoy your day. All right, guys.
I will end on this though, guys, right? Trading is about building wealth over time. I see a lot of people think they want to have that $1,000,000 at the end of each day. And if I don't have $1,000,000 and making thousands of dollars of each day, I'm a failure and giving up. Guys, take it one trade at a time. See 20%, take 20% and compound. Compound, compound, compound. How would it look like if your portfolio, if you compounded 20%, 10%, 30%, right? And you're growing your account like that 2 years from now, 5 years from now, 10 years from now, right? It's all about a long game. Trading is about a long game. I've been in it for 10 years now. This is not something that happened overnight. That's not, you're going to get in it. You get into a Discord. Fuck call outs, guys. You need to stop relying on just call outs. Stop gambling your money away. They are there to help you, but they are not, nobody is going to get rich off of call outs. So get that out of your head first and foremost. Take this seriously. I think one of the biggest things I see that people waste is they don't take this seriously. It's not a hobby. It's not a game. It's not gambling. You want to see real results. You got to put in real effort, guys. Real effort, put in the screen time, put in the work, put in the journaling, and you will see a reward, but it's going to take time. It's going to take years, not weeks, not months, not days. So don't get discouraged if you had a bad week, if you had a bad month, especially if you're starting out, you're a year or two in, you have a bad week, you have a bad month. Okay. It's about 5, 10, 15, 20 year plan when it comes to trading. You got to think about it. A lot of people work a 9 to 5 for all of their lives and they'll never see $1,000,000. They'll never have $100,000 in their account or 50,000. They live paycheck to paycheck until they die. So would you rather put in the time now and spend 2 to 5 to 10 years working on the skill that you can use forever? right? Or are you just going to give up and be like, oh, I'm not making thousands of dollars right now. I'm just going to give up. Or you're not going to put in the time and see the results, and you're just going to jump from Discord to Discord to Discord. And then you're like,
Mhm.
oh, that's a waste. I'm going to give up. Put in the time to see the results. I promise you it will pay off. You just have to do it. Take it one trade at a time this week, guys. One trade. For most of you, taking one trade a day and being done is really what's going to build your account. It's
Mhm.
not taking 4, 5, 10 trades. Doing less equals more when it comes to trading. So I just want you guys to know that don't give up on yourselves. There is a lot going on this week. When it comes to earnings, why not just wait until after earnings, see where the stock is at, having that IV crush, and
Mhm.
then taking a trade after that, right? Don't
Absolutely.
gamble on the earnings. Uh, Sometimes you can hit, sometimes you cannot. Most people lose gambling on earnings. So just take it one trade at a time, guys. I believe in all of you. You should believe in yourselves. When it comes down to it, even if you don't know it, you are the best trader that you know. Just think about that. You're the best trader that you know. So I'll just end on that note. Guys, let's kill it this week. Practice good risk management. Stay disciplined. Stay patient. You got this. Do not give up. I love you guys.
Peace.